Pressure is building on the banks to pass on yesterday's interest rate cut in full and quickly. So far, none of the big four have shown their hand. And new research shows just how much the banks are saving themselves by holding off on any announcements.
The big four banks have much to gain from not passing on yesterday's 25 basis point interest rate cut. Researcher David Richardson says each day they delay it adds $6.2 million to their collective profits.
When interest rates are on their way up, the banks are very quick to follow the Reserve Bank. But on the way down, they're slow to follow and then don't pass them on in full.
So far, none of the big banks have indicated their response to yesterday's official rate cut. ANZ will announce its decision as scheduled on Friday.
The banks aren't making money out of delaying or not passing on in full the rate cuts because that money is going straight to people with deposits and people who lend the money to the banks.
Consumer groups say when the big banks withhold rate cuts, they lose new business. Official data for March shows smaller lenders increased home loan sales by 20%. The big banks only saw a 0.5% increase.
Sometimes you get a better deal from the smaller banks. So the important thing is to shop around.
And the big banks' interest rate strategies have now come even further under the spotlight. The competition regulator, the ACCC, has got new powers to ensure the banks aren't signalling to each other when and how much they'll move on interest rates.
If they're trying to send coded smoke signals to their competitors, then we would take action.
With the new laws, it actually gets harder for us to explain to customers why it is that they may not be getting a full rate cut, and in effect it's a form of muzzle on the banks.
The ACCC says it hopes the laws may soon be applied to other industries. Simon Palin, ABC News.